Hey there, friends. This is Michael, aka Mr. Creekside, back in action. I know it's been ages since we last connected. Sort of feels like I turned into a ghost, didn't it? Well, I'm here to tell you that I'm more than just all right. My journey's been wild, a real roller coaster of self discovery and healing. And oh, how I've missed all of you. Gosh, I've missed all of y'all. You've been in my thoughts every step of the way, feeling rejuvenated and more like myself again. I'm thrilled to be back and talk about some things I've learned since I was gone. So, are you ready to get back into the groove with me? Let's kick this off. You might have caught my recent slip up on Snapchat. Yeah, that accidental story about buying Bitcoin. Funny how things turned out, right? I was talking to a friend who asked me about what I would do with my money if I could save. I started talking about Bitcoin and its fascinating approach to fix our current financial system. And before we dive further into Bitcoin, I want to apologize for not having my camera. I have so many peripherals tied into this computer for business purposes that I'm running out of USB ports and I got to find a way to make it all work. And without further ado, let's shed some light on a concept that is crucial to understanding the traditional banking system, fractional reserve banking. It sounds complex, but let's stay with me. It's simpler than it sounds. Up here on the screen, I have Investopedia pulled up. I'm going to share this article with you, but I'm basically going to break it down for you. In fractional reserve banking, when you deposit money in a bank, it doesn't just sit there. Banks are actually allowed to lend it out in a significant portion of your deposits while keeping only a fraction in reserve. So if everyone decided to withdraw their money at the same time, the bank wouldn't have enough. This system works under normal conditions, but it can be risky, especially during financial crises. To understand what's currently going on, I did some research and I was looking about the deposit multiplier because I know that the banks are allowed to loan out our money and then they have to keep a portion, at least I thought. And the process of reading this article, I scrolled down a little bit right here and it said important right here on this page. The Federal Reserve eliminated the reserve requirements for all banks as of March 15th, 2020. The move was part of its effort to keep economy active or activity healthy during the COVID-19 pandemic. The Fed's action effectively sets the reserve requirements ratios at zero. Sorry, I struggled there. I'm a little nervous making this video, but I was like, there's no way that it's like that still. Went to the Federal Reserve website. Here it is again. As announced on March 15th, 2020, the board reduced reserve requirement ratios to 0% effective March 26, 2020. This action eliminated reserve requirements for all depository institutions. And I'm like, wait a minute. Did they just forget to update their website? Go to the frequently asked questions. And is the elimination of reserve requirements permanent? And they state currently the board has no plans to reimpose reserve requirements. However, the board may adjust reserve requirement ratios in the future if conditions warrant. Basically, let's break this down as if you put $100 in the bank, that bank can now loan out all $100 that you have in there. Now, it still shows that you have that $100 in your bank account, but somebody physically has that money. Now, when they get that money, banks can loan other banks. And then when they deposit that money into their bank, guess what? 100% gets to be loaned out again. Now, if you do this hundreds of times, as many times as our banking institutions continuously do this, you can see where this can become a problem, where there'll be unforeseen leverage, like unimaginable leverage in the system. Like you see that, right? Like they say they keep up with it, but there was a time where they said that they have no idea how much leverage was in the system. There was so much talk about a full economic collapse because of COVID that it's unreal. Like they said that if it collapses, they didn't have any idea how bad it was going to be. I mean, you can look all this stuff up. It's easily searchable on the internet. Now, contrast this with Bitcoin. Bitcoin operates on a completely different principle. There's no need for a bank to hold or manage your money. Each Bitcoin transaction is recorded on a public ledger known as the blockchain, which is maintained by a network of computers that anyone can host themselves. This decentralized nature of Bitcoin means that it's not subject to the same risks and limitations of fractional reserve banking. There's only 21 million Bitcoin in existence. You can break all of those Bitcoin down like you do a dollar into 100 million Satoshis per coin, and that is the max supply that there will ever be in Bitcoin. It is written in the code. It is a fundamental building block to Bitcoin. So why might banks be uneasy about Bitcoin? Well, Bitcoin challenges this very foundation of traditional banking. It offers a way to store and transfer value without the need of central authority. This could potentially reduce the role and influence of banks in the financial system. Banks also thrive on control and oversight of money, something Bitcoin takes away by giving power back to the people. Now, people know this. The banks right now are loaning out the money over and over and over again, to the point of, look at this debt clock. Sorry, I live in the country. I'm a little farm boy. Me getting into Bitcoin probably was like the least rational thing that could have probably ever happened, but here we are. So if you look, the national debt is 33,904,000,000,000, $33,700,000. I'm not going to go any further than that. It's clicking so fast. Each person in this country is $100,000 in debt, almost 101. It's $100,877. If you do it per taxpayer, people that are over 18 are eligible for paying taxes. It's $259,949 per person. Do you have that in your bank account? I didn't think so. And hey, for the few that did say that they did, congratulations. The mass majority of the US population does not have that kind of money. Furthermore, the transparent and immutable nature of Bitcoin's blockchain contrasts sharply with the often opaque operations of the bank. This transparency is appealing to those who desire more open and accountable financial system, one where the banks cannot constantly print and make their own money over and over and over again. The current system that we're in. See, the most of the population doesn't understand. The more money that there is in supply, the less valuable the dollars they have are. We are in a system that incentivizes you to spend, 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 and not stop. Because if you don't spend, the money that you do save is worth less over time. I mean, think about it. Our parents used to buy houses cheaper than us, and our parents bought cheaper houses than them. You see where this is going? In essence, Bitcoin isn't just a new type of currency. It's a radical rethinking of how money can and should work in our interconnected world. It's about shifting the power from centralized institutions back to individuals. That's a big deal, especially in a time where trust in these institutions is wavering. When we sit there and see them keep spending, 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 where they tell us everything is fine, where they tell us that inflation is normal, we can afford 2 wars, things of that nature. They want to keep printing our worth to the ground because in the end, they're making all the money from their foreign lobbyists and things of that nature. You know, all of our politicians are bought and paid for. I hate to say it, they are. So after that unexpected Snapchat story, I realized it's the perfect time to demystify Bitcoin, especially for those new to the concept. We are at the start of a bull run, and FOMO is real. And you need the basic knowledge to keep yourself safe. So let's dive in. First off, FOMO is the fear of missing out. Bitcoin is on a tear. It started out this year around $15,000, $16,000. We are now sitting around $43,981.80. That is a heck of a gain, guys. That is a heck of a gain. So, in 2007 and 2008, the state of the economic structure of the United States and the world was on the brink of collapse. Due to banks writing predatory loans, we had a big financial collapse in the United States. So what the banks were doing were writing house loans to people that they knew that they were not going to be able to pay the loans back, and in turn it caused a gigantic financial crisis. Now, the US government responded by bailing out the banks and taking care of the people that caused the problem instead of making the people who had to suffer through it whole. Now, on October 31st, 2008, Satoshi Nakamoto posted what would be known as the Bitcoin white paper. It was titled Bitcoin, a peer-to-peer electronic cash system. So this white paper is kind of complicated. It's short, only 9 pages long, but it covers everything about the network. To save time, I'm only going to cover the conclusion, but there will be a link down in the description so you can read the whole thing and see it for yourself. Satoshi said, "We have proposed a system for electronic transactions without relying on trust. We started with the usual framework of coins made from digital signatures, which provides strong control of ownership but is incomplete without a way to prevent double spending. To solve this, we proposed a peer-to-peer network using proof of work to record a public history of transactions that quickly becomes computationally impractical for an attacker to change if honest nodes control a majority of the CPU power. The network is robust in its unstructured simplicity. Nodes work all at once with little coordination. They do not need to be identified since messages are not routed to any particular place and only need to be delivered on a best effort basis. Nodes can leave and rejoin the network at will, accepting the proof of work chain as proof of what happened while they were gone. They vote with their CPU power, expressing their acceptance of valid blocks by working on extending them and rejecting invalid blocks by refusing to work on them. Any needed rules and incentives can be enforced with this consensus mechanism." Basically, all the nodes and computers on the network work together. They can come and go as they please. Nothing needs to stay. This network is truly peer-to-peer. Anybody can join and start hosting it today, and also participating in keeping the network safe from a 5150 attack or anything like that, or having bad faith actors running the majority of the network. The more people that participate, the more secure the network is, and it would be harder to roll back transactions or change the transactional history on the Bitcoin network. Now, I'm not saying that it can't be done right now. I think as it sits right now, the strongest supercomputer still doesn't stand a chance against the Bitcoin network. But that is as far as the public knows. There's no telling what the government has or anything like that. But Satoshi's vision was to bring peer-to-peer money back. And not just an inflatable money, he wanted a deflationary money. This Bitcoin, every 4 years, the mining rewards get halved. They are going to go down to 3 point something coins in 2024 for mining rewards. So that means that the network be more scarce, basically. Like the coins on the network that come out, the new coins coming in are less. Now we're in an economy where the money coming in is always more. Now the money coming in is gonna be less. They can't print it. Like, it's set 21 million coins. Each Satoshi can only be divided up by 100 million. That is the max supply. That is it. That's it. So as you can see, the Bitcoin system is vastly different than the current payment system that we live in. It actually incentivizes you to hold on to your assets because they will be worth more over time, versus right now, the longer you hold your assets, the longer you hold your cash, your money, the less it's worth. I think that's a very big difference. Basically, with this new revolutionary payment system that Satoshi introduced, You could become your own bank. There is no more need for banks. There's no more need for intermediaries. You could manage all of your assets all by yourself and take out all these middlemans, all these other people. It would cut out the cost of so much stuff, and it would cause so much grief that people have to deal with to be taken away from this world. Think of all the transactional fees and stuff that the banks do, or how they'll like hold up a payment by a little bit. That way they can charge you an overdraft fee, or charge you extra fees for this or that, or charge you just to be there monthly. Like, why would you want to do that when you could create a 12-word phrase, keep all your assets with those 12 words, pull it up anywhere, anytime, with any system, and all your money is right there? If the business goes under, you're not going to lose your money. If anything happens, I mean, it's all right there. Like, if the bank goes down, you get a portion of your assets. If your wallet provider goes down, you just take your 12 words to another wallet provider and you're good to go. It's that simple. Like, Bitcoin is a big difference than what they want us to deal with right now. And now they want us to have a central bank digital currency. They want to tell you how much money you're allowed to make. They want to tell you what you're allowed to buy. If you disobey what they say, they want to ban you on social media. What do you think they're going to do when it comes down to cash or to your money soon? You seen what they did to Canada, right? You seen what they did to the truckers when the truckers just didn't agree with what they were saying. You think that's not happening here? Look how they silence people off of social media for just disagreeing with the narrative. You can't have your own opinion no more without the risk of losing everything. It shouldn't be like that. That control shouldn't be there. And Bitcoin starts to give the people back the control that they deserve, the control that they should have always had. Now I know what you're thinking. You're like, there's only 21 million Bitcoin. How am I gonna get one? Again, there's 21 million Bitcoin, but they can be divided up into 100 million pieces. Again, that is what is called a Satoshi. You can buy fractional shares of Bitcoin. You don't need to buy a whole one. You can buy parts of one. And in this video, we're going to actually go ahead and do that a little bit later on. But I just wanted to go ahead and cover that. One little off-topical tidbit I just wanted to add was also in the Genesis block, that would be the very first block minted for Bitcoin. Satoshi had this headline minted in. It says, Chancellor on the brink of second bailout for banks, 03 Jan 2009. I just thought y'all should see kind of where the economy was, where the world was at the time Bitcoin started. Fiat currency, the money issued by governments, holds value because we trust these governments and their ability to maintain its value. However, fiat currency can be vulnerable to inflation, especially when governments decide to print money. Think of it like watering down a drink. The more you add, the less potent it gets. Bitcoin, on the other hand, operates on a model of scarcity. The total number of Bitcoins that can ever exist, again, is only 21 million. I keep saying this because I want y'all to understand they can't make more. It's truly scarce. This limited supply mimics the properties of commodities like gold, which, if we go over the chart, if we put $1 in Bitcoin versus $1 in gold, 14.2 years ago, you'd have $38,506,100. You'd have about $2 in gold over the course of that 14 years. So why do they keep telling you to buy gold? They keep finding more. It is the most mined for resource ever. Like, at least in my thing, they keep finding more and more gold. It's not scarce if they keep finding more, bigger mines, bigger places to sleuth and find the gold. I mean, when you think about it, if there's more and more coming in existence, how is it holding its value? If you've only gained $1 I'm sorry to tell you, and I'm sorry to tell anybody that's invested in gold, this is going to be a shocker to you. You have lost money towards inflation. You lost money versus inflation. It's a hard pill to swallow, I know. But inflation outpaced gold. Now, consider why you should hold Bitcoin. Well, scarcity is number one. Two, it's decentralized. While it's true that Bitcoin is volatile, it also means it has tremendous potential for growth. As the adoption for Bitcoin increases, the value could continue to rise. It is only estimated that there's only 100 million people in Bitcoin. There's 8 billion people on the planet. If there's only 21 million Bitcoin, please take 21 million and divide it by 8 billion. We could pull up a calculator right now, and I will do that. I'm going to give you time to do it, but I'll do it here on the screen. So if you had 21 million and you divided that by 8 billion people, that's how much Bitcoin you would have per person if it was distributed equally across everybody in the world. I'm just saying. And if you multiply that by today's price, that is all you need to get that amount. It's going up daily. I mean, I wouldn't say it's going up daily, but it's definitely going up. Especially in contrast when you start looking at it. Let's pull up this chart. We'll pull up the daily chart right here. Whoa, I know this looks crazy to y'all. This is a lot to look at, but this is like my hobby. So this is what I find fun. So Bitcoin this year, trying to stretch it out and stay in the same spot. All right. Let's see. Where was the first green candle? Let's stretch this out a little bit. So you start, this will be considered the bottom. As you can see, I got a little thing here. I wanted to see the trajectory. We're actually holding it pretty well. I don't know if you see, we're kind of following that line. So I might be learning TA, y'all. I've gotten a little bit better at it. All right. So this was the bottom down here. So since Friday, Friday, the 30th of December in 22, Bitcoin's been on a run. As you can see, by, let me see here, by February 2nd, we peaked out on that run right around $24,266, and then it dropped, and then it caught. And this is how the market goes. This is how we know for sure. When it came down here, it bumped this line. It went for the higher high, went for the low, and then it hit a lower low, and people started getting worried, thinking it was a false pump, and then bam, it took off again. Understand, this is how the market works. It fluctuates, but at the start of a bull run, this is what happens, and it does it every 4 years. Now, to put this in contrast, we're going to zoom out, and I'm going to just focus on this chart alone. Now, if you look at this chart, this is years down here. It's a long time right here. This is a 4-year span. This is 2020. This was the start of the bull run. 2024 is the halving again. Okay, they're predicting April 2024, so that's going to be like somewhere around April 10th, I'm going to say. Think about it. Bitcoin, the last time at the bottom of the bull run, that was this spot. It was this bottom. You see? Crashed down and then peaked up, went down, went back up, crashed down. Guess what? It's going to do it again. See what happens every 4 year, Bitcoin's mining rewards get cut in half. So take that as you have a farm, you own that farm, you bought that farm. You produce the only food on your island, right? But every 4 years, your production on that farm gets halved. What do you think is going to happen to the food on that island if you are the only farm? It's going to become more scarce and it's going to become worth more. That is the Bitcoin principle. That is how it happens. Every 4 years, it does the same thing. But the difference between then and now is you got major corporations dumping tens to hundreds of millions of dollars into Bitcoin this time. You got them filing trade funds, see ETFs, And BlackRock is the biggest asset manager in the world. They handle more money than the US government has at their disposal. Let that sink in. They control more money than the US government has at their disposal. That's how big this company is. There's a joke that they are the fourth branch of government. Anything that BlackRock wants, BlackRock gets, and they filed for a Bitcoin ETF, which means that BlackRock is going to be putting their assets into Bitcoin. And in turn, this is why I say FOMO is going to become real, because Bitcoin's only 44,000 right now, and we're getting astronomical numbers, 100 plus $1,000, $500,000, $1,000,000 Bitcoins, things like that. And when you hear that you're going to get gains like that, you automatically want to start putting your money and stuff in there. Now, how do you do so safely? Well, if you've ever heard of FTX, you should know that you should not keep your money on exchanges, not your keys, not your coin, Robinhood, Fidelity, like Robinhood, all these places. You don't want to keep your money there. I'm telling you, don't keep your money there. What you want to do is you want to find a wallet. You can buy from an exchange. You could do whatever you want with your money. But I'm going to tell you right now, everybody that was a holder of coins that left their money on the exchange at FTX are all losing their money right now. Even though they hold it, they're going to have to sell that money for the bankruptcy court, for the lawyers, all the fees behind it, and you're only going to get a portion of your money back. That's what happens when bankruptcy court happens. That's what happens when a bank goes under. That's what happens when a business goes under. You only get a portion. They're not going to make you whole. They don't care about you. And they line their pockets in the whole way through. So, how do you get into the Bitcoin market or the crypto market and be safe? The only way to do it is to have your own wallet. Now, there's multiple different wallets. There's wallets for each ecosystem. There was wallets for getting your keys offline, which those are cold wallets. And then there's hot wallets like Exodus right here. This also works with a cold wallet. That's why I chose it for this program, for this video. Hey y'all, it's Editor Michael here. I know some of y'all are here for the content. Some of y'all are here just for the wallets and learning how to set them up. I want to let you know that there's a link down in the description below for this wallet and others. This is a basic setup. All of the wallets generally follow this rule of thumb. But I wanted to provide you with options because this one might not suit your needs, or you might want something a little different. There's tons of options in this space. You're not set to just one. So please feel free to explore them. Let's get back into that crypto action. Now, what you want to do is you want to download Exodus. I've already done it. Once you download it, you're going to want to come in here and get it going. Now, Exodus works with your browser. You don't need to download it to your computer. It works with your phone, Android or iPhone. It's very versatile, and you can take your accounts everywhere. You can share them. Now, setup for all of these wallets is relatively the same. They're different for everyone, but they're all pretty much like the same steps. So with Exodus, what you want to do is you want to come over here. As soon as you open it, it doesn't matter if it's the browser one or if it's the desktop one or the mobile one, you want to go to settings. You have to go to settings. Now, when you go to settings, please come over to backup, create your password. I'm going to do so now, just so you can see. This is a demo. I've already done this. I'm just showing you on this, and then we'll go to my account, and then we'll actually buy some crypto. Once you do your password, it's going to ask you to do it again. And then once you put it in, this is where it gets spicy. Now, never share your secret phrase with anyone. Anyone that has your secret phrase can access your funds. Now, when you're talking to customer support for one of these exchanges or one of these people, never give your seed phrase out. If anybody ever asks you for your seed phrase, you should know that it's automatically a scam. Don't do it. Don't do it. What you need to do is make sure that you're in an area where nobody is around, no cameras, no nothing. And then when you're in this area, go ahead and generate your secret phrase. Remember, if they get this, that password that you created at the beginning is null and void. If you forget that password, you need these words or you lose your money. These words are like your social security number or your bank account. Do not lose them. Do not share them. And make sure you have duplicate copies. There's things like bifolds that are little metal things that you can put your seed phrase in. That way, in a house fire or anything like that, you don't lose it. That is a problem. It does happen. Keep your seed phrase safe. Keep it in multiple locations, but make sure they're secure locations. Now that we got that out the way, when you go and generate it, at least on the desktop version, when you hover over, it'll show you a word. You need to write down all 12 of these words, make sure they're in order, make sure you number them, make sure the spelling is correct. If you have wrong spelling, you lose your assets. Do you understand that? And you're like, 12 words? How's that going to be safe? Trust me, it's safe. It works. It's been working since the dawn of Bitcoin. All right? Write them all down. Once you write them all down, you're going to come to this next step. And you got to verify a few of the words in the order. Make sure you click the right one, and then you'll be done. Now, remember that password. Don't keep it with the seed phrase, and keep your seed phrase and multiple backups of your seed phrases in multiple locations, but make sure they're safe, okay? I wouldn't give my assets to any centralized entity, like I said, because you will only get a portion of them back. Once you verify your seed phrase by following all of the steps, come back to the home screen where you will see Bitcoin, Ethereum, Tether, and multiple other currencies listed. We are only mainly focused on Bitcoin for this tutorial because it is the most talked about and sought after currency at this time. So go ahead and click Bitcoin so we can reveal your wallet address and where to send your coins. Once on this screen, you will see your public key. Now, I want to insert a caveat here. Please do not send any funds to this address. I just left this completely open as a demonstration to go ahead and show you how this works, okay? I don't have access to this. If you were planning on sending me a tip, it ain't going to come through this way. Please do not do this. Please, I don't have access to this portfolio. It'll become a lost coin at that point. I mean, it'll be a gift to the whole community, the whole Bitcoin community, and that'd be a gracious gift, but please do not do it. So right here is your public key. This is what you give to people to send you money. This is what you give to applications, maybe to do your taxes or something. There's a setting inside Exodus where you can generate a new one of these every time. If you do that, it'll really anonymize your transactions. It's not going to make it totally anonymous. It's still trackable, but it helps you keep your funds kind of obscure and make it harder to follow along with. Now, the blockchain is public, and that is why it's designed that way. It's not to hide anything. It's not for people to launder money like people try to say. No, it's just how it's designed because it is a public, open sourced protocol that anybody can be a part of. It is designed that way to try to keep you safe. And you don't have to do it if you don't want to. You can keep using the same address over and over and over again. It's just some things people do. But just to keep it simple, all you have to do is just come in here and give this. You can copy it or let them scan that QR code, and then any funds that they send to it will go to your wallet. Again, not this one, the one that comes in your Exodus wallet via browser, desktop, mobile, however you chose to do it. I also want to highlight, if you use any of the links down below, your public address will be, I wouldn't say the same on every wallet, but this is the same concept. You would go in, you'd select what coin you're about to receive, you'd send them the public address or show them the QR code. You don't have to just use Exodus There's multiple different ones. I'm going to tell you that numerous times, but they all function practically the same. It is really simple, I promise you. You got tons of assets, different chains. All of these are different cryptocurrencies. Bitcoin is its own blockchain. Ethereum, its own blockchain. Tether, it's a stable coin. You buy this or to get out of a coin if you want to get out of it, or if you don't want to buy a coin yet, but you want to have dry powder on the side, people buy stable coins. There's Tether, US dollar coin. US dollar coin is suspected to be the US stable coin, aka central bank distributed currency. Those are bad. Bitcoin is the antithesis of a central bank digital currency, and that's for a video for another time. We're going to cover it. People are lying to you, and I'm pretty sure that's going to be the next video I make on this stuff. But Cardano, different blockchain. Avalanche, different blockchain. Each one of these have different use cases, and you should explore each one of these blockchains independently and figure out which ones work for you, which ones you like. Right now, because there's only 100 million people investing into crypto, this is like the start of the .com era for our parents. This is like investing in Google. This is like investing in Apple, Amazon, when they were just change or dollars early on. Look at those stocks now. At least this is my belief. Do not take it as financial advice. But personally, this is the dawn of a new era. They dawned at the Web3 era, and everybody is pushing towards this. And I'm going to highlight that in the second video because I know politicians and people are saying, don't buy it, don't buy it, don't buy it. So we're going to buy it. Without further ado, I'm going to switch over to my secure system where I do all my crypto stuff, and we are going to fund a wallet. So without further ado, let's go ahead and get into that, and I'm going to show you how it all works. That way you get the idea. That way if you want to participate, you can. Also, one thing I want to highlight before I switch, you can swap in here. So if you have a stable coin or you have Bitcoin and you want to, or other coins, you could basically swap anything you want. So if you had Avalanche but you wanted Solana, which I don't know why you would want an inflationary coin versus one that has a fixed amount, but you can swap them. Okay. If and vice versa, you can swap them back around. You can choose how much you want to do, all that stuff. If you want to buy directly into this wallet, just remember that you can buy within a certain amount. Let's see if it'll let me do 40. Nope. You got to at least, buy 0.001 Bitcoin. So that's about $50 at the current price. The minimum amount of coins that you need to purchase varies per liquidity provider and also per coin that you choose. Bitcoin, Ethereum, Atom, Avalanche, Cardano, all of them will have different requirements for how much you need to spend. It's based on the platform that Exodus uses. I know they use multiple ones such as MoonPay, Ramp, and others. I think Sardine's also one of them. So it varies, and the terms and conditions apply to each payment processor. They do charge a fee. Exodus will look at all of their people or all of their liquidity providers that are places that you can get your crypto from and try to make sure you get the best rate. And I mean, they got quite a few that they're working with. Yes, you pay a little bit more for them to do it this way, but I've learned that if you use something like Coinbase or something, you don't pay the subscription fee to Coinbase, which is crazy. You pay a substantial amount in fees just to transfer your money out to your own wallet, and it's just easier using this, funding your wallet directly. I mean, I like Coinbase. They give you free coins. They teach people basics of blockchains and how things work, which I wholeheartedly believe if you want to sign up for Coinbase, it's not a bad thing. It looks like it's going to be the actual exchange for the United States. They're pushing all the other ones out. Crypto.com has been pretty fortunate. They haven't been mentioned, but all the focus is on Coinbase. BlackRock also listed Coinbase as their transactional provider for their Bitcoin ETF. So that's something to think about. Now, once you decide how much money you are going to spend and the coin that you are going to buy, it'll give you a rough estimate about how much you're going to get. Go ahead and press continue, and it'll take you to your web browser and pull up the page to the service that it's going to provide. On this screen right here, it says it's going to be MoonPay. And I'm going to go ahead and complete that purchase here in a minute. But once you press continue, you should go straight and directly to the MoonPay website. And all you have to do is just fill in the details and complete the purchase. Now, if it is your first time, you may have to KYC. If you're an American citizen or in a Western aligning country, they have KYC rules and anti-money laundering. So you might have to go through those steps. Not a big deal. Everybody does it. It's pretty much the same that you would have to do for Cash App or something like that. Once you complete it, the money will be sent to your wallet in a short amount of time. Remove the emotions, put the money in. Let's get it rocking. Well, I'm fumbling with all my stuff to get that payment processed. I wanted to go over something that was also unique with the Exodus wallet. On the mobile side, you can also fund with your Robinhood account. So if you use them to purchase your crypto, you can go ahead and fund your wallet that way too. I know one of my friends actually still uses Robinhood. I haven't used them in a long time, since the GameStop saga. So I know people still use them. I'm not going to say that they're a bad service. I'm not going to say anything like that. But what I will say is that I don't believe in keeping my money on a centralized entity after watching what happened to FTX and a couple of these other crypto exchanges. Some of them are still going through bankruptcy proceedings now, and customers don't even know if they're ever going to be made whole or partially whole, how little of a payment they're going to get. Now, understand, in bankruptcy proceedings, if your assets were being held there, they have a right to burn them up. Well, they are trying to figure out how they're going to divvy that up. Now, to me, I don't think that's right, and that's why I don't keep my money on those exchanges. If your money is in the wallet and something happens to the wallet provider, you can take your 12 words somewhere else, and you can put them in and move all your money somewhere else. It is that simple. So why risk losing any of your assets when you can take 5 minutes and set something up this simple? And that's not just all that these wallets can do. They have other features too. All right. So without doxing myself, we went ahead and completed the order. I am just now waiting for it to process. It is that simple. Once you press pay, that's it. And then you just sit here and wait, and then eventually it'll just show up and then into your Exodus account, which I've been neglecting Bitcoin. I've been covering and getting into some of the alts. And in regards to the altcoins, let me tell you, there's more room to grow. If you think Bitcoin's crazy, let me tell you, these alts are just as crazy. One thing I do like about the Trezor cold storage wallet is that you can have multiple passwords for said wallet. And with that being said, each one of those passwords that you have in that wallet is a different set of wallets. So definitely a win-win. I wanted to show you another thing. Bitcoin isn't the only asset that you can put money into. Some of them offer rewards. As you can see, you can earn 7% APY on Solana, 7.96 APY on Algorand, 3.3% APY on Cardano. As you see, there is plenty, and I mean plenty, of places to go ahead and make some money in this ecosystem. And that's not all of them. This is just the start. And this is why the banks are scared. This is why they tell you not to get into this. And the art of transparency. We are back again. As you can see, we're back to 24 minutes. And you're wondering, what happened? Did they restart the timer over? No, they canceled the transaction. As seen here. That is the very first time that this has happened to me ever in using MoonPay. I usually use Ramp. I figured I'd give it one more try. So if it doesn't work, it doesn't work. I am a long-term hodler, like I said, where I wouldn't have entered if I was a trader, but to me, it doesn't matter. Like I said, I'm here for the long term. I see where this is going. Unfortunately, MoonPay doesn't want to work with me. Okay. If it doesn't work this time in the next 23 minutes, MoonPay, I've never had a transaction fail with you, and I actually really like you as a service. I didn't like you at first because I was like, man, it's kind of like, eh. But then I realized that you can fund directly into your cold wallets, and I was like, yeah, you know what, I'm going to do this. And here we are. You failed one of your transactions. I know I bought in at the right time. You don't gotta play with me. I seen it go to the top of the range. I see it dancing over there on my chart. So we're gonna buy in. I put the same amount of money in there again. The idea is we're gonna make this a stream portfolio, and we're gonna see how much money that it will make over time. Now that's my assets. It doesn't belong to the stream. I personally bought it. But we're going to review this portfolio over and over and over again just to show the power of DCAing. I'm only going to buy one time, but I have been buying in. When I first got into crypto and I would see a candle like that pop up, I would freak out, think, oh my God, it's time to sell. As you can see though, to the left of that candle, all the other ones, they're just as messy. They're just as messy. As you can see here, the 0.00268 Bitcoin that we ordered was sent directly to the wallet. It took roughly 2 attempts and about 45 minutes for it to get there, but MoonPay came through again. Woo! That was a lot of content, wasn't it? Again, listed down below are all the wallets that I have used or looked at and assessed. There's multiple different ones. I'm not associated with none of the projects. Nobody pays me. I use some of these products, yes, but I'm not paid by none of them. I'm just a simple little farm boy in the middle of a farm that learned about the Bitcoin and how everything works because they messed me up on a GameStop short. That's how this all started. Thank you, Citadel. Thank you, Robinhood. But now I hope everybody else learned something. Anybody new or anything like that. I'm going to go ahead and go over more of this stuff as time goes on. There's a few other things. I got on Twitter the other day and I seen something I didn't like, and I'm going to make sure I cover that. And there's not like Twitter beef or some personal drama. It's going to be a U.S. politician and bankers and stuff leading you all astray, and how I find it wrong and appalling. So if you want to hear how you're being lied to, what they're telling you to do versus what they're doing in the background, please come back for episode 2. I'd love to have you. If you like what you heard, hit the like button down below. Comment if you have any questions, comments, or concerns. I'm more than willing to have a conversation with you about this topic. I actually really like this topic. I watch people look at charts, and I deep dive into these projects trying to learn something new all the time. So I hope you stick around, and I hope we learn something together. Till next time, have a good one.